The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the October 11th Friday edition. My pleasure to be here Monday through Friday, market days. And 877-927-6648 is the number to call. And let's go straight to the numbers. And thank you for 2 hours. Steve, first hour. Tom O'Brien with Daryl Martin, the second hour. Straight off, get Nico DeHaan. And we're going to go straight to the markets. I'm looking at the E-minis. They're up 3.50 right now. Very strong. Let's switch to the, I don't even have it right here. Got a little problem with the voice activation, I guess. So let me just go to this right here. And I'm going to call a particular number and go straight there. Where was that number? I wrote it down. Here we go. And while I call that number, it's a little rough, and I'm going to try to make this as smooth as possible. There we go, 79. Okay, I'm calling that number. We'll see what happens. I'm not sure if that's going to be much better, being remotely out here like this. And let me see. Hold on. Checking one. And any ringy dingies there? I'm here. You want to set me up?
I'm waiting to find out. If it's switched and you connect to me, great. All right, we're on. So I'll put this down. Now, unfortunately, I do not have two hands. I'm going to try to do that during the break. We'll try to get back on. Meantime, back at the ranch, let's go through the numbers. I'm going to move over to this window. The Dow is up 17 at 15,143. The S&P is down 70 cents at 1691. The Comp Index is up 6 at 3766. And, oops, not so good, huh? Gold is down 28, really getting smacked. Usual Friday smackdown for gold. $12.65 is the number right now. Silver's down 63 cents at 21.20. Platinum's down 15, 13.70. High-grade copper's up $1.60, stuck in that trading range. And we've got bonds up 23 seconds at 133.5. Dollar is down 12 cents. So let's just run all the numbers as I see them. We've done that. So the E-minis had a very strong, from the doji low of 1640, that's the December contract, it had a very strong spike to the upside. It's gone to 16, let me see what the high, 1691.50. Held the 9-period exponential moving average on the last pullback, which is at 1675. The 120-minute chart has gone to peak A. I thought I might just use what I call the Chapman wave, the phantom peak, but instead we don't need it because it's gone to leg D at 1691.50. The MACD is flattening out, and the stochastic's holding at 92%. But I said to subscribers today with three scenarios. They always see scenarios: go up, you go down, you go sideways. But most importantly, what I was saying is I thought today was a sideways day, was probably a doji candle at the close, or something within a small trading range. And I'll explain exactly what I'm looking at. Let me just move to this particular chart right here. It's going to be a little slow. And now we get this one out the way. There it goes. There. That's the chart that I show my subscribers every day. And it shows that the Dow has had a spectacular move from the low of 14,719, made 3 days ago, a little doji candle. That's where the price opens and closes at about the same range with a little bit of a wick on either side. And we've run up in a huge move yesterday, one of those big 300-point movers. We don't get them very often. And now we're forming a potential. I say potential because the day has barely begun. It's an hour and a half into then, not even 2 hours. So the high today of the Dow, higher than yesterday, it's at 15,182. That's 15,190. to the 15,220 area is going to be really important to monitor. That's number one. Number two, there's a characteristic that I identified a very long time ago where I talk about the single leg A up. It happens periodically on an emotional move that you get a whopping move in the, sometimes it's the futures pre-opening, 3:30 comes out move, at Eastern time, by the 9:30 opening, the entire move is fizzled and you come back and now you're starting the real action of the day. That'll be the case here if the Dow closes decisively under 50, well, first of all, 15,050 to 15,030 will be very important. 15,050 is a nice good moving average. I would have to say it's more like 14,950. Any close there over the next few days, and you've got to say, whoops, be careful. All the conflagration in Washington could be having an impact, and it could have impact just as easy on the downside as it is on the upside. That's number one. The other is that the stochastic is at about 20, I'm not sure if it's 20%. 20% is okay. You really want to see 28 to 33% in a move as strong as this, and it has to happen fairly quickly. If the stochastic starts to break down, it doesn't look like it is right now, but if it starts to break down, you will know, as well as this fast-moving average of the MACD, or the moving average convergence divergence, the technical tool, moving averages of different lengths. And this was the greatest weight on the last closing price. In this particular instance, the 0% line has not turned positive. It's at minus 23 in the Dow. And the fast-moving average has not yet crossed positive. That gives a lot of room to the upside if we were to spike. But it also says you've got to be careful. Why? Because if it deflects lower, the fast-moving average deflects lower, with the Dow going below 15,050, it's going to say, you're really careful because I've used up a tremendous amount of energy and haven't been able to follow through. In other words, you're coming down on your bike or a slope or whatever it is, and the bump is just steep enough to give you a good bounce, but not to continue much further without having more momentum. And that's kind of what we're looking at here. So I'm going to go straight to these charts right here. It'll be a little slow. I want to look at something a little differently today. Haven't done that for a while, and that's going to be to look at the XLF, which is the S&P Select Financial ETF. And that's holding really well off the gap up yesterday. It hasn't made a new recovery high. The high yesterday was 20.21, and today the high is, parallel high, 20.21. It needs to break that so that it can start to get into a line, a trend line that comes from way back. That trend line comes right in where it is right now, so that if the XLF, and I'm watching this really closely, we just move this away. The 120-minute chart is making peak B. I just need to move this if I can do it slowly. Out the way. Very slowly out the way. I'm not sure why it's so slow, but that's the way it goes sometimes. Not sure if it's back at my office or here, that the connection's a little bit weak. But most importantly, what we're looking at is that the XLF had that island candle reversal back on the week of 20th of September, spiked up to 20.83, but it had a low of 20.38. That low was above the previous week's high and the next week's high, and therefore it's an island reversal. If the XLF and the monthly chart is still acting very well, although it's gone to a PT, it's still acting well by being very close to the highs. If at any point the XLF next week can even pass the 20.50 area, it's at 20.19 right now, unchanged. If it can do that, it's saying that that H pattern, I'm not able to draw it right now, is going to turn into a cup formation. That I can draw. Let me see that. A cup formation. And therefore, the previous high becomes a target. So you know exactly what I'm looking at is that strength in the XLF that continues into next week. It doesn't even have to close there. It just has to get into that 20.50. It says there's enough energy to say it's possible to retest the previous high of 20.93. A failure in the next 2 days, closing below 19.98, I'd say 19.90, to say, uh-oh, be very careful. Used a lot of energy in this move, so far it's had no impact on the weekly chart. That's the reason why I'm talking about the 2050s. You need to see that stochastic start to move higher. Monthly chart is still very good looking. So we've got to keep that in mind. And the other I want you to look at, which I haven't looked at for a long time with you, that's the IYT. What is the IYT? It's the iShares of Dow Jones Transportation Average. Made a new high in September. So far in October, it's just a tad underneath the all-time high. I need to do this, draw a line just to show you how this works. This is that pattern I call the falling axle, the declining cone, expanding cone formation. It's broken out above in this leg A. That's positive. Nice candle so far today. Even more importantly, what I'm looking at is I want to see in the IYT a break, and here I want to close. It's not good enough just to touch it. We want to close above the high, 119.48 high of the week of the 1st of October. The high that we're looking at was 121 round number high, which made a peak C back on the 20th of September. Now, this is going to be very interesting. I hope I can expand this without a problem. Yep, there it goes. The transportation index, now you know there's a theory about the Dow, the Dow, the transports, industrial transports, how they confirm, how they don't confirm, etc. I really didn't put all that much weight in it. By the time it does that, it's really almost irrelevant because you're now looking for some kind of a top because they're both going to high. But what I do like is that the pattern itself in leg B is the same leg B. If I'm able to switch here, let me do it. One hand, here you go. Dollar INVU. Here it goes. That's the same PT that might be made this month, or it's a leg B if 50,709 on the Dow is taken out. And if they work in concert, I would like to see that. I like indexes that work in concert because it says you've got a unified confluence of positive factors. So I'll be watching this closely via this iShares Dow Jones Transportation Index. It's trading right now unchanged at 100.21. And even more important than trading unchanged, it hasn't so far given back anything at all from yesterday. Just a high-level consolidation. Very nice. I don't know if I feel like going to the 120-minute chart right now. Now, in the weekly chart, there are a couple. The reason why I want you to bring this up. The rising, I talk about the declining wedge, that expanding wedge. Well, there's a pattern that we look at which is called the rising wedge. So we've got a break coming up. I don't want to overlap. I want to be able, in the break, to maybe try to get back to my headphones and see if that will work. So hold tight. I'll be back, and we'll be back as soon as I can. Hold tight. I'm going to keep the...
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
The Art of Timing the Trade Charts is the only software package available with a built-in Gartley and Butterfly pattern scanner that will scan thousands of stocks, ETFs, and indices each day to find these patterns and then make them available to you with just a single click of your mouse. Tom O'Brien and Dave White will be hosting a live event for all Art of Timing the Trade Chart subscribers on October 16th at 6:30 p.m. Eastern. And for a limited time, we're offering a promotion where new signups can gain access to this powerful charting software, as well as the live study session workshop coming up this Wednesday night for only $1. That's right, $1 for the whole month with the class included. Remember, this offer is only good till this coming Wednesday night when the workshop takes place live with Tom O'Brien and Dave White, so don't delay. For all the details, visit the front page of TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. I want to quickly finish the IYT because I had, I wanted to go. I tried to do it yesterday, but I had technical difficulties there as well. But most importantly, I had Steve calling from Germany and a question from a subscriber, Steve, about something else. So I'm going to just do the IYT. I want to show that this is the pattern I'm looking at. You see the red line of the weekly. If you're looking at on your mobile device or when you're looking at the Tiger TV live, you will see this trend line that I've drawn in the weekly chart of the iShares of the Dow Jones Transportation Index. Most important is that it held on Wednesday at the turnaround. So a breakdown of the IYT will occur. It's at 118.26. Any move down below Wednesday's low, got to be careful. A low below 114, it would look very much like it would test the 109 to 111 area from the summer. Most importantly, what I'm looking at is that there could be a renaming of this with 121 high bar if it's taken out. That's number one. So far it's acting well, but it was really close to breaking down with these three peaks that we're looking at here. I want to talk about these three peaks in a moment. As the stochastic and MACD were not, the MACD is acting very poorly, deflecting from the lows. So it's going to be really important that the transports actually spiral higher in the next week or two without taking out that low. That'll be very positive. While I'm talking about it, I want to talk about, I was looking at the CLZ. I was looking at DIG. And at that particular point, the question was what to do with the DIG because T from Germany was long. And what I'd said, and it was the very last few minutes, so I tried to do it very quickly, and I really shouldn't have done it. I write down the calls, I write down my answers. I'm always very pleased with them, most of the time, I should say. This particular instance, I said to him there are three ways of looking at it, and two ways were that you were going to just cut loose right there because it was wrong, and you could always jump in, even if it was just immediately later after thinking it through. But I said to him, think about it. Don't rush to do anything right now, but give yourself some time. And my thinking was to take something off either there or if it dropped a little bit more, and that just gives you time. Well, what happened, that was just about the low, and it spiraled high and spiked higher. DIG, in fact, is the Ultra Oil and Gas Pro shares. Now, it's gone to a single leg A up, a very strong move from the moment that he was calling, which was somewhere around the 59 area. It's at 61, 65. It doesn't sound like much, but these things move very quickly. The reason why I wanted to bring it up, and what I didn't have time to complete the conversation with, but I did bring it up, and I said, I don't know about the weekly, but I'm going to keep it as peak ABC. That can allow for a pullback all the way down to 56 or even more, and then spiral up to make leg D. But I don't have any real justification at this particular point to call the DIG in the weekly chart an alternate wave count G. And you can see that it's gone right back above the 9-period moving average. So I want you to just always like to be able to look at whatever it is, discuss it as objectively as possible, always when I'm right or when I'm wrong. You got to be able to do that in the market. You got to be able to just, you don't want that little trading guard sitting on your shoulder, wiggling the finger, saying, "Uh-oh, hubris! You're doing something." Honest as you can, because that way you look at each trade and you have no baggage. You don't want baggage. For instance, when I talk about my Chapman wave trend gauge, how successful it's been, knowing that it's a statistic, at some point it will not work. But so far, it's got like a 96, 97% accuracy rate. But I'm always aware that that can change. So this is the same sort of thing. I just wanted to show, and I didn't have time to. I discussed it with him that there was a trend line that I was looking at, but I didn't have time to draw, which is very subtle. The pattern that you have the declining, well, it looks like an ice cream cone on the side. And now what we're looking at is, it's getting choppy because I can understand now what I need to do. All right, I won't be doing any of this. I'll keep it as smooth as I can. If it takes out the high of, if it goes above 62.50, that's going to be very positive and improve the weekly chart. Now I'm going to do one thing. It might be choppy just for a moment. I'm bringing it up because it's a great question that I've got. I discussed this on air a long time ago. I haven't for quite a while because it hasn't come up. But a very astute Chapman Waver emailed me to ask me about the low bar that might also be counted as a peak. And I said that the rule that I have is only in the instant restart after a peak B after a peak D can that occur. But there's one instance that I've been doing research on, and I'll talk about that when we get back from the break. Basil Chapman, Untitled Technicians Hour. We'll be right back after this choppy interlude.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Target Technicians Hour. Don't forget, my service is the opening call. Today we added 2 positions on the long side of stocks that actually have been holding really, really well. In fact, one of them didn't even know that there was a 1,000-point decline in the Dow, and that I like the best of all. So we're going to go to Mike in Ormond Beach. Hi, Mike. How are you?
Pretty good, Basil. I got out of my DXB trade the other day, and I'm wondering now, should I think about going long the diamonds, or should I look at possibly going short again, like with one of the inverse ETFs?
So this is the issue, and this is the issue that's going to be sitting over our heads for, I think, a couple of days going into, I've actually been totally out of the news, completely out of the news, so I don't even know quite what's going on politically. And that's very important to know. At this, normally I wouldn't care, but in this particular instance, because news is market making, I'm going to say to you, I'm going to just stick with what I'm seeing right now in terms of the market. Mm-hmm. Because today did not see a pullback of that held, and what I said based on this Chapman Wave chin gauge barometer is that if there was a small pullback, even though the futures were up earlier on, and the Dow got back to a plus sign and then started working its way towards a plus 40 and then 50, 60, that would be a very positive sign. And then maybe it won't be able to close there. It'll come back down again. So I'm going to recommend now, one of the problems that you have is that you're like, it's actually a good thing, but on the other hand, it makes it a little bit nerve-wracking, is because you're at work, you want to be able to put your position on, and you'll have your stops, but you aren't able to control an overnight gap, up or down. That's really the case, right?
Yeah, I mean, sometimes I can get to it first thing in the morning, but during the day it's pretty tough to do things intraday.
So here's what I'm going to recommend. You might miss the actual trade itself, but this is a single leg A up. It has the potential to keep moving like this and not let anybody in, because a lot of people got out, a lot of people were short, a lot of people were supposed to cover yesterday. I suspect that the move was so quick and so big that they might not have added to short positions, but they didn't get out of all of them. So I'm looking at this as having the potential, if there's any kind of good news. One of the reasons why I wanted to go long is because I'm looking at this and saying, so much negativity, 11, 12, there were 15 sessions to the downside. Not everyone was down, but they just couldn't break the 9-period moving average in the Dow. There has to be this reflex rally, and this 15,190 to the 15,220, maybe 250 area is going to be a real big test for the market. Overnight, you're closed, and then you've got the weekend. Anything can happen over the weekend. Then you've got Sunday night. If the future's open, hey, let's just look at the worst scenario. You go long right now, and the future's open huge down on Sunday night and follow through on Monday morning. Yeah, in a way, you're kind of vulnerable. So this is the recommendation that I can make to you is this. One is you might be giving up potential gains, but you're also giving up the chance of taking potential loss. I would prefer to have a pullback Monday or Tuesday into the back to closer towards the 15,030 to the 50 area, or even 15,000, and then if the following session is not a follow-through down day, to go long, something like the diamonds. But I'm going to make another suggestion to you. If you are prepared to risk 1.5 points, about 1% on the Dow diamonds, not 2 for 1, just 1 for 1, straight 1 for 1, so that at least you're in the position of taking advantage of a move that says that the Dow has a potential, and I have to mention potential, that if everything's ameliorated during the week, there isn't any conflagration between the different sides, that there will be pullbacks, but nothing will be major, and that the bias will be to make higher highs and higher lows, then my recommendation is to just take a smallish position in the Dow Diamonds, the DIA. That way, you're not overly extended, you're not underly extended, you know that you've got yourself a 1 or even a 2% stop loss, and let it ride and say, hey, market, the VIX has dropped tremendously in the 16s to the 15s or lower. It's going to give buying pressure. The VIX starts to move back to 16.5, 17.5. I'd say, hey, be careful. And make it as simple as that. I'm not sure anything else that I could do. Or if you want to use, I would have recommended something like a GE, which could be a much less expensive way of doing the diamonds, because they should actually track together. I would stick to the core and just stay with the diamonds at this particular point. So even now it's up, the Dow's up 52 at 15,178. It's just sudden pop up. The S&P's up 4.5 at 1687. Comp index is doing nicely. They're all up about 0.34 to 0.29%, something like that. That's my recommendation. There is a chance that during the week, I might start to get signals that say, this is going to run out of steam. This is not looking good. But, I would go with the bias. Today's follow-through is really important. The day's not closed, but I think for a 1% risk, it might be worth it. You did make some money on the DXD. I don't want you to give all that back, but there's only one way to make money, is to be able to take some kind of a risk. I'm looking at the NYA. I don't want to move the charts too much, but the monthly chart of the Dow, of the New York Stock Exchange, is still holding beautifully. It's over 2,000 stocks. I'm inclined to say, right at this particular time, because of the viciousness of the turnaround yesterday, I think there's still some shorts that need to be covered. Therefore, there's a bias towards the upside. So how about that? I'm going to recommend just small position in the Dow Diamonds. At least you're in the right position. I can't say go wholeheartedly in, and I can't say to short at this particular time. The bias just appears to me to still be fulfilling some upside potential. If it holds, it's going to squeeze a lot of people to come in. And I have to tell you that the stocks that I looked at that were acting well, were acting so well at that bit right up until yesterday, and they are important stocks. And I think there are stocks that are saying, don't dismiss the fact that this rotational correction could in fact involve some sectors, but the ones that have held well, and quite a few I don't know if you heard my XLF interpretation. So far, it's good action in the financials. Mm-hmm. I think this is the way to go. So I hope that accomplishes what your call was meant to do, and that is to find out how you could best trade. I'm calling it a trade this particular moment. And the only way I think I would recommend you doing it, even you're right at the high of this particular move, I think a 1% or 1.5% stop would be the way to go. I hope that helps you, Mike.
Yes, it does, Basil. And I know I listened to your archive of yesterday's show, and I know yesterday you were talking about how in a bear market, how like a short covering rally, how violent they can be. And yes. I remember some of the ones that we had like in 2002.
Do you remember that one that was 1,000 points in minutes?
Yeah.
1,000 points to the upside?
And so I appreciate all your information, and thank you, and have a great weekend.
Thank you very much for calling. I always appreciate your call, Mike. Have a great weekend as well.
Bye-bye.
So let's go back to the New York Stock Exchange. This is the monthly chart, and there was a bar that went, the NYSE went down in October of 2011, went down to a low of 6,414. The all-time high was 10,387 back in 2000. No, that wasn't the all-time high. I don't want to move this chart right now, but that was. Let me just check. Could be a mistake to move this around. Could get fuzzy again. Yep, that was an all-time high. So 10,387, 2007, and then it plunged to 4,181. That is more than a 50. That's a 58 or maybe 60% decline. That's huge. In October of 2009, was that 8 or 9? I think that was 8, right? No, that was March of 2009. Then it ran up, and it went to a peak. Do you remember the Chapman wave? The methodology we look at is we're looking for the lowest, most obvious low bar, and then we merely count each successively higher peak. When you get to D, you've got to be a little bit careful there. And it went to D at 87.18, and that, I believe, was December. Oops, I didn't mean to move that. That's a very important trend line there. Somewhere around May of 2011 at 87.18, pulls back over 2,000 points to the low of October. Now that bar, a huge bar, an engulfing bar of the previous candle of month before September, I looked at that. I couldn't tell you how many times. There were so many charts that did that, and I said, am I going to have to call that a peak A, an unusual peak A? And my rule of thumb, I don't like to make any changes in the methodology except if they are called variations. You know, there's a fantastic set of pieces by Bach, 32 variations, Bach, the Goldberg variations, and Beethoven has his variations. So you've got your core theme. Within the core theme, you can have an alteration of some of the melody or the harmony or the rhythms, but the core theme is there. And I have looked at what I call the Chapman wave methodology, and I have those peak A to B to C to D. I found over the years that at peak D, something can happen within 3 bars if it makes a new recovery higher under certain circumstances. It's called recycling. You can actually get a brand new, instead of being negative, it is not just positive, it is extraordinarily positive, because it says that that particular price movement could go not just to a new peak A, B, C, D, but very often it can go to an E and even an F when it recycles like that. But that's the only time it's in a rising price formation after peak D that you can get the instant restart. This is not anything close to it. However, I've done a lot of work and I've got a little study going on to deal with this. So I was so pleased with Steve's question. I decided I would not call that peak D, and that over a period of time, we should see a peak A, a B. When I get to C, I'm going to have this alternate count that if I really had called that a peak D, would I use it? I was hoping I didn't. I don't want to change the normality of such an easy system. And look what happened. I didn't. And then it got to leg D last month. The NYSE went to 9,357. Let me put that in here. Do I want to do that and get a choppy voice? I think I said 9357. I'll just type that in. And that says to me, I was correct in my thinking. It was not, it's actually, let me tell you what the study is finding. It's finding that that particular bar with the number of stocks that I've looked at and indexes turns out to be extremely positive. That's all I wanted to find out. So it's just another indicator. It's another variation of the waveform. So I do not count it, but I keep it in mind. I actually make a notation of it at some point, and I say, remember, that's a very important bar. And in golfing, that you can't call peak A on that bar because you haven't made a peak. It's still going down. You have to wait for the next bar that makes a higher low to be able to call it a trough. Once it's got a trough, you can start your count. And that means you can go all the way. In this case, it went to that A, that B, that C, leg D. A move in October above 93.58 continues leg D. Dow's up 61. S&P's up 590. I'm thrilled that that there's a market follow through to the upside today, because it doesn't necessarily make it an easier analysis, but what it does is it says that the momentum so far is just starting to negate the chance of that single leg A up syndrome that I talk about, because it's usually, it can happen. Believe me, it can happen. But the weight of evidence says is if the single leg A, after a huge move off the bottom, is going to turn around, it usually turns around the second bar after that move. And today's the second bar. Day's young. By the end of the day, who knows? We could be down 64 and instead of being up 64, or in the NYA, New York Stock Exchange case, being up 36 instead of being down. But look at that candle in the weekly. And this is the reason why I brought up that DIG chart, the DIG. I never quite finished it. I'll do it right now. To be a little choppy, I'm moving charts around, losing a couple of bytes and bits. So let me just do this. You see this move for peak F in the New York Stock Exchange. I can point right there, all the way down to there, and then there's two peaks. Well, the stochastic is at 80%. That's okay, but it is turning down a little bit, and the MACD is flattening out. But if the MACD is able to cross positively with the price movement, it says there's a better chance, I even put it in as leg B, going to peak B, that this is going to be peak B, and that you'll expect a C to come straight after that. So that is very important to me, and we're about to go to a break, and I'll get back that chart during the break of the DIG chart, because the weekly one is the one I talk about. Look at the similarity. I'll be right back straight after this break. Dow's up 64, S&P's up 6.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts, plus a 64% on rest at Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN. TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, everyone. Basil Chapman. We are back. Final segment of the show. Good time to do a couple of things. Going back to that dig chart. The DIG made a high, a peak D. Remember, 4 peaks, that's what we look for. Peak D high on the week of the 15th of March at 15.65 of this year. Pulls back in what you can call a trough ABC to the downside. Holds the trend line support into the buy zone and rallies right up into what's now the sell zone. It goes to an A and it pulls back. Makes a higher low. Goes back to a B. Pulls back, holds that line, goes to a C, gets repelled at this red line. Let me put the red line in. And now, and this is what I was thinking at the time on Wednesday when Steve called from Germany, that if it started to break down and it took out the low that was made that day, it really could go quite a bit lower. I didn't have time to draw the channel lines. This rising wedge also has a channel, the inside track, and that would have been negative and said you could still go down quite a bit more, and that could go down to the 5650 area. That's what I was afraid of. Instead, it reversed that very minute, and it's running beautifully. And now it says there's a real good chance it could go back into the up track, and that's what I was hoping to do yesterday, but I had technical problems. Right, it's in between 65.30 and 65.80s. So that's really, that says incomplete to the upside because it really looks now like it wants to go to D. But wait, most importantly, look at this. I mentioned the SMHs yesterday, I think it was. Look how they are in the same sort of thing, this rising wedge formation. And the daily has had a huge move from the low. I don't want to make it too choppy. So 39.10 just 3 days ago. Today's high is 40.51. So that's only a 1.5, but it's in a sector that normally is just a commodity sector, semiconductor, chips. I mean, come on. So something's going on here. And I think this is part of an economic picture that we've got to contend with here, that there's something that's happening out in the robust computer world. And now I have to consider that this is also a peak D that's gone to leg A, peak A, B. I wrote that in F/B. This is not looking like a G/C. This looks like a C. I'm even going to take it away here because it hurts my eye. There should be a C, and all you need to do is to see the SMHs trading at 40.53 up 17 cents go 1 penny above 40.71, that's less than 20 cents away, and you start leg D, and then you get into some resistance area. So that's my thinking right now. We have no short positions. We only have long positions, and I'm being very selective. I gave up on some. Look at this, the airlines, if I can do this without making it too choppy, XAL. Look at this. XAL. Now, I don't know if this is going to be an F or a B in the weekly, but look at the fabulous move above that 200-period moving average, and they're about to cross the 9 over the 200, and that says, okay, that's where you've got to be a little bit careful in another month or two when they do cross. So in the meantime, I think that we've got the orders are doing very nicely. I looked at something like Tata Motors. That's India. Of course, they also own some famous brands now. Look at that, a breakout. It looks fantastic. Look at the weekly chart. This Chapman Wave Cup and Ladle breakout in leg B. Monthly chart is just started leg C. I don't want to make it too choppy, but I want to also say, look at look at this for the monthly chart right there. So it's breaking out. It's going to try to tackle that inverted Roman candle with a high. If it can get, it's a 31.34. If in the next 2 months or so it can get into the 35s, there's a real good chance it makes that U-shaped pattern all the way to 37.65. Now it's got major support. It's trading at 31.35. TTM is a symbol, up 94 cents at 31.38. And look what's happening. It's turning what was resistance into a whole support area right between 30 and 29. That should be support. I think there are some good things going on here. I like it. So let's just sum up. We're about to close out. Have a fantastic weekend, everybody. We're looking at the Dow. If on Sunday night, when the markets open, the S&Ps are suddenly down.
Profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.